Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so we basically we got that breakdown from what I had identified as descending triangle, and like I said, we essentially had got that that stab up, fake out liquidity grab, whatever you want to call it, slingshotted us back down, give us the power we needed to break that support line, which is obviously the bottom of the channel that we've been watching this whole time. So as soon as we broke through that flat line support, went down to our next level, which is our Fibonacci confluence zone. And then as soon as we took out the parabolic SAR, we got a powerful move back up here to take out the late shorters. And we came back up, got rejected, or we were in the process of getting rejected by our short time frame moving average, confirmed a downtrend on the 4 hour according to the parabolic SAR. And if you look here on the TJD Jewel Thief, you'll see the knife has come down and stabbed through, and we're basically still getting like the downward action. So that was basically the break of a support area and then the retest of that support area. And then it was support previously, we break through it, find support at a lower level, come back up, attempt to get back above it, find resistance now on that support. That's a SR flip, support resistance flip. So now in the future we would expect this to act as resistance if we close down below it again, in which case we'll then get denied basically by this moving average, and we'll be able to get like a powerful test down as it's confirmation to the market that we've lost another level, and that we're going to move down to the next level and then see if we can find support and then reverse from there. But at this point in time, let me zoom out here. Oh, and you'll see also, while I got it right here, on the TJD, TD, MACD, we're still in a strong downtrend, although we were starting to level out for a little bit. I think that's just giving us time to reset the oscillators. We started getting the red back on the histogram here again. Look how many green histograms we got without any like positive price action. That's what I mean when I say resetting the oscillators. A bunch of green, but no actual price action accordingly. So we had this many histograms in a row, and when it was all said and done, the price was lower than when it started, or equal to when it started. So we basically just wasted all those for what, 2 red ones. So now it's more likely that we can get a bunch of reds in a row. We can't just get 100 reds in a row. You have to get some green ones. So when you see like no price action from the green, but you get a few in a row like that, it's typically like the oscillators resetting. Or same thing, if you see like price action like this, but you see like your oscillators trending to the upside, whatever it is, RSI, stochastic, like anything basically, and it's trending to the upside like that, expect it's just resetting the oscillators, so that when you do get the dump, it's just going to be a massive dump, as where you get like a long steady like increase in the oscillators, but you get like no legitimate like price action, or when it's all said and done, price action is below where it started. So it's very clear you're in a downtrend, because the time it takes to like reset the oscillators and move up is like 1 step forward, and then you get the dump and it takes you 2 steps backwards. So price is lower than when it started. So then when you get the relief rally again, you take that 1 step back up, and then you get the dump again, follow through price action, and you take 2 steps backwards. So again, you end up every time at a lower support area. And then finally, at some point in time, you'll reverse the trend, and then we'll see the trend the opposite way. You'll take 2 steps up, and then you'll have 1 step back, and then you might have 3 steps up and 1 step back. And essentially that's just like the market reversing the trend, to where you're taking like you're getting positive price action or negative price action accordingly. And that's all the trend is just taking advantage of like the most the most basic form of, if I flip this coin, is it going to be heads or tails? If I bet on this market, is it going to go up or down? And that's all the trend is. It's just that first tiny little bit of market advantage. So if you're just a random person and you say, I like Bitcoin, so I'm betting it goes up, versus you're somebody that looks at a chart and says, okay, Bitcoin is in a confirmed uptrend, so I'm betting that Bitcoin goes up. That's already just one level of advantage that you have. That's going to give you the ability to make an educated guess as to the direction of the market. Therefore, you have a higher likelihood of success. So it's no longer just a 50-50 up or down. So now every little piece of the market, every little oscillator, indicator, advantage, pattern, whatever it is that you're able to identify consistently and get consistent positive results from, you put those together into essentially, your like trading strategy. And then your trading plan, you start putting in like the financials to it, percentages that you're going to put into, at certain levels, or like how much of your account's going to be in a certain portion, like swing or day trades or, investment, whatever the situation is. You put all that together, and then you finally, when it's said and done, you have essentially like the outline to a book that spells out like the steps that you take to success. And that's how you're able to measure these things over time, and then see like, okay, statistically speaking, whenever I see this pattern, or whenever I see this moving average cross, or whatever the situation is that you're looking at, you can identify that and say, what is the likelihood of success if I take this signal, or if I take this move based on said, if this then that. And then you're able to measure that scientifically, basically using mathematics, and essentially like increase your chance of success. And that's the difference between somebody that just like casually invests, or trades or gambles, whatever, versus someone that's like, a career trader or investor or whatever it is. Do you take that time, you put in that extra work that you would put in to be like a professional at something, or, are you just like a casual, like, weekend warrior, as we like to refer to it? But that's essentially like the basic breakdown of like the strategy, and the importance of it. And when you start keeping like a trade journal, and you start keeping track of these things, and you start using like the same patterns or oscillators or indicators or moving averages or whatever over time, especially over like months and years and decades, these things become so much more measurable. And you can look back at it, and basically you have the outline to success. And once you have that, you have a huge advantage in the market. Because think about just yourself, when you started trading, and then think about yourself at that point in time. Once you have that all laid out, and you have like that framework to success, which one of you, don't compare yourself to everyone else, but which one of you is going to be more likely to succeed? Do you have a better chance once you've taken all those steps to being a successful trader? Or are you still going to be trading the same as, day one, your first trade, and you said like, let's long this Ethereum thing and go with it? Like, no, of course you're gonna, you know what I mean? That's what it's all about. It's self-improvement. Because like, you don't have to be the best trader in the world to make a career out of this and become rich. Like, you just have to be better, than some people. You just have to be, smart about your trades and be better than yourself. Because in all reality, like, anybody comes into the market and goes up or down, they could flip a coin, whatever, and be successful. So essentially everybody has that same chance to just walk up and, get lucky and be successful. So if you can take luck and leave that alone, and then you can add in like skill, and you can hone those skills, and then you take into account like position sizing, and account management, and you start putting like actual technicals in place, and then combining them with fundamentals, depending on what market you're looking at. Not as much in crypto, but there's still good fundamentals in some things in crypto. It's just they're harder to measure, is what makes it more difficult. So, but anyway, you take all those things, you put them all together, you create this trading plan, and essentially you have a huge advantage. And it's going to give you like an understanding that you didn't even know was possible of the markets. And then once you have that understanding, you see so much more of it. You see all the little fake outs before you happen. You can predict price movement, not based on like luck or magic, but like I said, you can legitimately look at these things and say, okay, I've seen this happen thousands of times, and more often than not, this happens, then that happens. So I'm going to, trade accordingly. I'm going to take a shot at this. And, chances are, if this is a measurable statistic that you've been using over time, that it's going to be more than 50-50. And if you keep taking high reward, low risk trades, with a high likelihood of success over 50%, like, you're going to kill it over time. I mean, if every time you win, you double your stack, and every time you lose, you lose 5% of what you like put up, I mean, over time, you're going to crush it. And obviously those are like higher numbers, but the fact of the matter is just when it's all said and done, all you got to do is just be net positive. And when you're net positive for long enough, the way it all compounds and everything, you're going to win in this space. And the fact of the matter is that if you're even in crypto, like chances are you at least believe in like blockchain or Bitcoin or some portion of this technology and time. And like that's where legitimate, like, trading is great and everything, but it's harder to trade an asset that's always going down than it is one that's always going up. Like, it's very easy to make money in a bull market, and much more difficult, much more work to make money in a bear market. So I would much rather just be sitting back, like popping up my, account size every day and just, counting stacks. But you have to wait and be patient for that. And that's where being early is great and everything. But like, we're early to a bear market. If you got in crypto like anytime in the last 3 years, like all you did was just get early to the next bull market. So you're here for all the dumps for multiple years upon years upon years. But you got to stay in the game liquid and long enough that when it's all said and done, that you get that capital in the right place, so that when that next bull run does come, that's when you become that's when you 10x or 100x your stack or whatever, just sitting back on vacation. You know what I mean? That's what it's all about. It's that next level of euphoria. And essentially we're identifying now clearly, like, we're at the end of a market cycle. So more often than not, or more likely than not, we're going to have a long prolonged bear market for the next couple of years. Now, if that's in the stock market, though, we may see at some point in time, gold and crypto start decoupling themselves, like, legitimately, and other assets as well, from traditional markets. But we'll see like a lot of volatility and everything. But that's where the opportunity is made. So I think it's very important right now to do whatever you can to minimize your expenses and maximize your income, and basically, like, build up those assets during the bear market and educate yourself and learn. That way, by the time the bull market does get here, like, you've essentially, like, mastered, well, as much as you can, you've essentially mastered technical analysis in these moves, and you're ready for them. So but there we have it, crypto trend trader, a little bit of our technical analysis, and also some explanations of trading plan and everything. And I may start, like, revealing a little bit more of my own, like, personal trading plan and how I use these indicators and everything. I'm pretty open about it, but it is like, I have put like thousands upon thousands upon thousands of hours of work and whatnot into all this stuff. So the thought of just giving it away for nothing, I do give away a ton of stuff already. So I'm not sure I'm just prepared to, fully divulge that as well. But I may get into it, or, discuss a little bit more in the courses. So there you have it, guys. What I expect here is, essentially test up potentially as high as that 54.60 range. Basically like retesting the breakdown, rejection, and then, can get like that follow through sell off down here. I think this is basically just our dead cat bounce off of our breakthrough. This is like the break, the retest, and then we can get continuation. But at this point in time, as you can see, people once again are already back bullish in this, and it's like, and that's maybe just crypto, I don't know, or just like delusional belief, but people just get so bullish all the time. It's like, how can you have like this much of a sell-off and then be bullish? Like, that doesn't even make sense. We like break like a very important like trend line, like destroy the entire potential, for what everybody was like hoping about, come down to a substantially lower low, put in bearish formations left and right, and confirm basically that we're going to stay in a downtrend on like the longest time frame that we can legitimately analyze. All that, and people, I think, are probably like as or maybe more bullish than ever. So I don't know. Not really sure, but I think we'll see like a massive liquidity grab here coming up. We do have about 30 minutes until this 4-hour closes, so we probably will see that test sooner than later. Maybe up as high as like 54.37. But again, I would expect like all of these relief rallies or dead cat bounces to basically get sold into and used as shorting opportunities for continuation. Until we do confirm a trend reversal on some of the lower time frames, in which case we can start like hoping, wishing, or identifying a trend reversal on longer time frames as well.